everyone. Welcome to Midweek with Indiacharts. This is Shilpa Raidas and we have Jay Vora with us today. Jay, I'm really excited and ready to hear the market insights. So let's begin quickly. I'm going to bombard you with the first question right away. The Fed paused yesterday, Jay, and didn't hike the Fed fund rates, yet the equity markets fell sharply. What's happening here, Jay?
Yeah. So the commentary of the Fed was very important. I mean, it was almost known that it won't, hike the Fed fund rate. So it was on that expected line. But what really spooked the market was when he said that it is going to be higher for longer, because markets were anticipating eventually cuts as well for the next year. So what happened was that, the Fed gave its economic projection for the next year. Okay. So wherein the GDP forecast was upgraded, the US unemployment percentage, that was reduced basically. So, the broader message was that the US economy is good, is resilient, it is doing well. So if it is doing well, then it actually means that, the rates are going to stay higher for longer. Okay. So now what had happened was that market was anticipating 100 bips cut in the next year, which means 4 rate cuts. But now the expectation has come down to 2 rate cuts, that too at the year end. So that is what had spooked the market a bit. Now the question is that will he, further do the rate hike or no? Honestly, I am not. I don't know, why will he actually raise the rate? The reason being that whatever data he wants to see, it is actually cooling off and it is going in the direction which they wanted to see. Okay, so basically, if you see the core PC, that is down. Okay, so this reading, this month's reading was slightly higher, but broadly it is going in the downward direction. Okay, when we see core PCE, that is going in a downward direction as well. Okay, this is what Fed would like to see. Okay, so due to energy prices higher and all, the month-on-month CPI, the normal CPI, that had spiked higher, but that is understandable that there can be some seasonality as well to that. But yes, broadly, whatever parameters basically the Fed wants to see, those are all cooling off. In fact, the job openings, that is the non-farm payroll data as well. Over there as well, you can see that the trend is continuously below the 200,000 mark. That is the employment data. So, the job openings data. So broadly, if we go to see, everything is happening in the direction which Fed wanted. But sometimes it baffles me that why he wants to, continuously raise the rate and actually, put burden on the people by higher interest rate. So the one thing I can possibly think of is that, what he's trying to do is that he's trying to scare the market and, dampen the sentiment. So without actually doing it, when we get that sort of, statement from the Fed, so, people do tend to hold back their purchasing and all. Okay. So maybe if that is the tactics which Fed wants to, do by constantly communicating that, we want to hike the rate, then we want to keep it higher for longer. If that is the plan, then maybe, but I don't know. Not many people are sure on the street that there will be one more rate hike. And also what people are pointing out that in 2021, the Fed said that they won't hike the rate, and the rates are going to stay lower, and basically inflation is transitory. Okay, that was the narrative which Fed was saying. But after that, in the history, this has been the quickest and the longest. The most quickest hike has been this time around. Okay, so from telling that they will keep the rates lower, they have done the fastest hike in the history. So that is how, quickly they can change. Now the narrative is that they will keep it higher for longer. But if they do that, then probably something is going to break. And if something breaks, then eventually they will have to cut the rates. So markets, right now is not, it is kind of going by what Fed is saying, but so now it is now only pricing in 2 rate cuts. That is till the, in the next year, that too in the second half. But actually, the Fed is not even saying that. The Fed is saying that the rates will be here probably for next year as well. But market is anticipating that there will be a rate cut. Okay. The only thing is that from four rate cuts, it has come down to 2, and that is basically from 100 bips, it has come down to 50 bips. But yes, if now again, the thing is that Fed said that they will be data dependent. Okay, so if they see a hotter, economy, or data which is well above the expectation, that is where case of rate hike will kick in. But more or less, I feel that the rate hiking cycle is done now, unless if there is a a negative surprise from crude oil. So say crude oil goes to say 110 level, 120 sort of levels, that can create some pressure on the inflation. But apart from crude oil, I don't see any risk to this entire inflation thing. Okay, which means that slowly they will see the data that they want to see. And if that happens, again, the idea will be that eventually they will start cutting the rates. So that is how I am thinking about this, and that is what I could understand reading all the stuff and what the commentators are telling over there.
Okay. So, Jay, is the rising bond yield and dollar index cause of concern and its implications on the Indian markets? And according to you, what's your take on the Nifty index, Jay? Nifty small cap and mid cap index, and what are the sentiment indicators telling us right now?
Sure. So I'll quickly share my screen. Now, see, this is one chart that is really important. That is because it tells you, now this is inverse of the US bond yield. So that means if the rate of the notes are falling, that means that the yields are rising, okay, and vice versa. So we can see over here that this is kind of a falling wedge pattern. Now, falling wedge pattern typically is a trend reversal pattern, which means that once we see a breakout from this pattern, that means the rates of the notes are going to go higher, which means that the yields can cool off. Okay. And also, if we see the sentiment towards the notes is not so positive. So let me show you the daily sentiment index. So this we kind of publish every day, and this is very helpful, especially at the key turning points. So now you can see the reading for T notes is 21. What it means that out of 100%, 21% of the people are bullish that T notes prices will rise higher. Okay, rest 80% are thinking that it won't rise higher. In fact, it will go lower. So this indicator actually works as a contra-indicator, especially when something important is happening in terms of structure. So we try to combine it with the Elliott wave. And similarly, you can see that 2 days back, the reading for crude oil. Yeah. So the reading for crude oil had gone to around 89, 90 kind of levels. Okay. From there, we have actually seen a cool off in the crude oil. So what the 90 reading tells you is that 90% of the people are bullish on crude oil, which means they expect the crude oil to inch higher. But when there is like a majority or the consensus view, that is when actually a contrary thing happens. And we can see that crude oil, when we see the chart over here, so it had actually seen a 5-wave rise in Elliott wave terms, and the sentiment had reached that 90 mark. So typically what happens is that after a 5-wave rise, you usually get a correction, and that is what is happening right now. Okay. So a similar thing is happening in the P notes, in the US Treasury notes as well. So wherein the sentiment has been low. Okay. Not many people are expecting the T notes to rally, which means that not many expect the US bond yields to fall. Okay. So now this is actually the trade that we are looking at, whether it breaks out from this falling channel or no. I mean from this falling wedge or no. If that happens, then it will be a trend reversal, and we can see a good reversal. So right now, the market is concerned about the rising yield, and in fact even rising dollar index as well. But even when we see in the dollar index, you can possibly see a opposite of what is happening in T notes, which is it is a rising wedge. Now, rising wedge is again a reversal pattern. So what happens is that if there is a breakdown from this pattern, that means that this entire rise is getting completed, and you can see a correction in the coming days. Okay, so dollar index is actually making a rising wedge pattern. So far, we haven't had a breakdown in the dollar index, nor has it closed below the key daily averages, which is the 20 and the 40-day exponential average, which we follow. But when we look at the momentum indicator, there has been a negative divergence, which means that dollar index is making higher high, but the proprietary indicator, which is Rohit momentum indicator that we follow, so that is not making higher high. In fact, it is making lower low. That is telling us that the momentum on the upside is lacking. Now, the moment the 20-day breaks and eventually the 40-day breaks, that's where we'll anticipate that this entire rise is complete, and even this can turn down. So the two of the factors which are there for the Indian indices and for the equity, those are likely to subside going forward. Okay, but they don't really have one-to-one sort of correlation. कि ये बढ़ा वो गिर गया, they don't have that sort of correlation. But typically they tend to follow the trend. So if this is reversing and this is going down, if yields are going down, then eventually equity will do well. In the short term, there can be some disconnect. Okay, but eventually this trend will follow. So looking at the yields and dollar index, in fact, we don't see that sort of nervous. I don't see that as a threat, especially for the Nifty index. But yes, see, what has happened is that, our markets have seen a runaway rally in the past few days and past few weeks. Okay. So what has happened is that a lot of sentiment indicators, which we have put it in our Strike platform, which is, by the way, free for use right now. So, you can actually have a look at it, and you can see how these sentiment indicators are unfolding. So, you'll be able to judge the market turns. So, for example, this was... so let me show you one of the indicators. So this was put call ratio open interest 9MA. Okay. So this was something where we were banking on that we will see an up move in the Nifty index, because what was happening is that the Nifty index was making lower low, but this ratio was making higher high. Okay. So which means that if this ratio bounces back, typically market tends to move higher. Okay. And when this ratio is going down, the market actually goes down. So what had happened was that in this phase, the market was going down, but this ratio was going up. Okay. This was giving an early indication that the market are likely to inch higher, once we see the breakout that occurs. And eventually the Nifty index formed a falling wedge pattern, and it broke out of that. Okay. So now this indicator, if we zoom out a little bit, okay, then we can see that it is coming towards its upper range. In the last 1 or 2 years, somewhere over here, it has peaked and then it has fallen, okay, which has led to some sort of correction. And something similar is what we are seeing it right now. Okay, so this tells us that maybe in the near term, some caution is warranted. But when we look at the put call ratio, okay, which is more of a medium term indicator, that is nowhere near, telling us that there is madness in the market. Because when we look at the history, okay, whenever it bottoms, that is where a peak occurs. Okay, you can see over here, it was a bottom over here and a peak occurred over here. Okay, so the reverse is also true, that when it is at the highest point, that means there is excess pessimism in the system. Okay, which is what we saw a few months back. Okay, that was basically over here. So this ratio was at the peak when Nifty made a bottom over here, which is telling you that at this bottom, the pessimism was even more than this bottom, because at this bottom, the ratio was around this level. Okay, so that was the kind of pessimism, and still by historical standards, it is still in an oversold zone, which means that Nifty index has a long way to go in the medium term. But in the interim, okay, what can happen is that you can surely get, these kind of corrections in between. So that is part and parcel, and we have to live with it, and we have to manage the risk when we enter that sort of phase. So to capture that sort of phase, that is where we have this put call ratio 9MA. Then we have the advanced decline ratio. So even advanced decline ratio, if people recall, we had said that, typically before peaking, it can make some negative divergence. So we have now seen a couple of divergence, okay, because this ratio peaked over here, but then we made one high, then we again made a newer high, and this ratio is over here. Okay, so now this ratio has fallen in the last couple of days. Okay, that is now telling you that the breadth is slowly, fading away. Basically, the texture of the market is getting a little weaker. Okay, and also when you see the advanced decline ratio, now this is the 40-day average, which is more of a medium term sort of indicator. Okay, so over here as well, now finally we have seen this divergence. So Nifty has made a higher high, but this ratio has not made a higher high. So yes, there is a scope of a correction that is possible, because like we had seen in the past as well. So say for example over here, okay, this had peaked over here, but then it kept on inching higher, and there was a negative divergence until when it saw a correction. So something of that sort is now possible. So we are now actually open to an idea of a correction, but provided we see a price confirmation. So I will come to the price confirmation part, but first let us look how the indicators are placed. Okay, now this is momentum swing. Okay, now this is an indicator which basically tells us that whether the RMI of the FNO stocks, are they rising or are they falling. Now what does the reading of 10 means is that only 10% of the stocks in the FNO basket is the place where RMI is rising. Baki 90 ka the RMI is falling. Okay, that is where we tend to get some short-term bottoms and top as well. So over here, basically when this reading comes to around 10, okay, 10 or below, that means that there is excess pessimism right now. Okay, and it basically means that the markets in the very near term are oversold. Okay, which means that there is a possibility of some degree of bounce. Okay, so this indicator basically, you can see it from 1 day to 5 day kind of perspective. Okay, the FNO indicator, which is the 9MA, this is something which we can look at it from 10 days to 1 month kind of perspective. Okay, and just to clarify, the put call volume ratio, okay, which is the 14MA, that is more of a medium term kind of view, from, you can say, from 1 month to probably 1 year as well. So it is very important to understand the implications of each of the momentum indicator, because some might be just relevant for 1 week. Okay, whereas some might be relevant for probably 6 months or 1 year as well. And now the second thing, which was another important thing, is that if we see the FII's positioning, okay, so this data is as of 18th. Okay, today's Bhav copy is not updated, so that's why this data is not updated. But over here also you can see that the Nifty index has made a higher high, but this has not made a higher high. Okay, now again, this is one of the red flag that is there in the market right now. Now, when we look at the diffusion indicator, this again is sentiment only. Okay, what it tells you is that how many percent of the components are above the 20 DMA of any particular index which we are seeing. Okay, so see, I'll first start with the Nifty index. So in the Nifty index, you can see that 80% or 78% of the components are still above the 20-day average. Okay, which is a good sign. Okay, you can see some bit of divergence over here, So basically, the peak happened over here for this indicator, but this up move later which happened, that was not accompanied by a higher high over here. So this is a small divergence. But yes, what is happening is that now this indicator is falling. So a falling indicator requires a price action confirmation as well to know its implication. So what happens is that if we get a correction in the Nifty index, okay, then this divergence will work very well, because that means that the weakness that we are seeing in the component, it is now actually visible on the main index as well. So धीरे धीरे सब कुछ inline आने लगेगा and everything, and what may happen is that Nifty will fall and this ratio will also fall. Okay, now when we look at the small and the mid cap index, this ratio is already been falling and it has fallen quite significantly. That is telling you that mid and the small cap index, the weakness is a lot more than the Nifty index. Okay, because over here, only 48% of the components are above the 20-day average. Now, when we look at the Nifty 500, in fact, let us look at the small cap index as well. Okay, small cap index में खाली 39% of the components are above the 20 DMA. If you see Nifty 500, okay, जो कि large और mid cap का mixture है, so over here you can see that there was a higher high, but that was not happening over here. The reason being that the mid and the small caps were weak. Okay, now even this ratio has started to fall. This ratio is falling and it is weakening. Okay, so this is again telling us that there is definitely some weakness that we are seeing in the components within the index. Now, again, the thing is that is the price confirming or no? So like I said, we'll come back to the price confirmation part, but look at what is happening towards the indicators, okay, within that index. Now, if you see total market is a broader basket and it is a basket of 750 stocks. So over here as well, again, we can see there is some sort of mini double top that has happened and then this index has fallen. But over here, you can see the breadth had already weakened and now it is weakening further. Okay, so this is again an indicator which was warning us that, there can be some sort of weakness. Now coming to the price confirmation part. So look, when do we say that, wait, let me hide the drawings. Yeah. So when do we say that the trend is weakening? Is when, the prices are below the averages and the correction which has happened, that is, this correction has retraced more than 61.8% of the rise. Okay, that's where you can call that this rise is basically getting weaker. Okay, but when we look at the retracement level, so when we look at the Nifty index and we look at the retracement level, I've already done that, so that's why the drawings are coming back. But see over here, you can see that Nifty index has so far retraced only 50% of the entire rise. Okay, so that means जब तक वो 61.8% नहीं टूटता है ना, that time you cannot say outright, you cannot be outright bearish. Okay, and also remember वो जो daily swing हमने जो देखा था, which is over here, sentiment and daily swing. Okay, so ये daily swing भी 10 पे आ रहा है and that is like I said वो एकदम short term के लिए gauge करने के लिए, right? So when we want to know the sentiment just from 1 to 3 days kind of perspective, that's where अगर वो 10 पे आता है, then it kind of becomes oversold. So given that the Nifty index has not broken the 61.8% retracement mark and it is still above the daily averages, there is a scope of a bounce in the near term. Now with that bounce will determine whether is the trend really changing, okay, or this was just a normal correction and we are headed higher. But in the near term, looking at the sentiment and everything, we can say that a little bit of bounce is possible in the near term, provided 61.8% retracement holds. Now, when do we say that a reversal may occur is when यहाँ पे suppose नीचे जाके somewhere we end up posting a positive daily close. Positive daily close means कि आज Nifty ऊपर बंद हुआ है. Okay, so it is only when there is a positive daily close that is the starting point to think of a reversal. Then you will need all those confirmation ke wo averages ke upar it should close and all. We will need those confirmation, but this is the initial confirmation that we are looking out for, and we are watching very closely if 61.8% holds or no. Okay. Now, when we look at the small and the mid cap index over here, what has happened is that they have not made a higher high. Okay, so this itself is telling us that Nifty had made a higher high, but this index did not make. So this was already weak. Okay, now further weakness is likely to creep in if the 20-day average is broken on a closing basis. So far, it has not broken, but like I was telling you, while explaining sentiment, price confirmation is required. So what will be that price confirmation? That price confirmation will be a closing below 20-day average. If that happens, then the mid cap can get into some trouble. Okay, and basically what we might then look out for is a correction up to the 40-day average, or maybe even the lower Bollinger Band in worst case. Okay. Now, if we look at the small cap index, okay, that has actually already broken the 20-day average in today's trading session. So it is by a small margin. So maybe we can give it a day to see how it behaves around the 20-day average. Okay, but if it breaks on a closing basis, and I mean, it has already broken, but if it sustains tomorrow below the 20-day average and it does not close above it tomorrow, then we can see furthermore weakness in the small cap index. Okay, and over there as well, similar thing, we will start expecting a decline probably up to the 40-day average. And if that breaks, then maybe the daily lower Bollinger Band may also open up. So, so the thing is that the diffusion index, which I showed over here, that is already pointing out towards a weakness. Now, if we get the price confirmation, then, you can see furthermore weakness. So right now, as of now, we are not saying that, this is the top and, you can get a big correction or something of that sort. We are not jumping on to that conclusion yet, because we want to see price action confirmation, and we don't have it till now. It is only when the 40-day average breaks very decisively, okay, and we are seeing many internal components also getting weakened, then that's where we'll take a call. But as of now, the thing is that we really need to be cautious in the near term, especially for the small mid cap index. Okay, for the large cap index, it has still not broken the 61.8% mark. So people, who have a medium termish kind of view, so they should still be okay, and they should view it as a normal correction only. It is only when the 61.8% breaks, which is for the Nifty index on at 19,605, that's when some concerns will start creeping in. But as of now, it looks like that we are okay, and maybe in the near term we can get the bounce as well. With that bounce, basically we'll try to judge whether are we going to a new high or are we going to make a lower low. So that is how all the important indices in the Nifty index and the small mid caps are poised. And it would be interesting to see what happens, because next week we will be very close to the monthly close as well. Okay, so it would be interesting to see how the month also ends for all these sort of indices.
Okay. So that was certainly very insightful, Jay. And I'm sure certainly for you guys, it was very impactful as well. So thank you so much, Jay. For those of you who have gained perspective from this video, do follow Indiacharts, click on subscribe button, and do not forget to hit on the bell icon, because that is when you receive a notification. We upload a video, and I'm sure you're curious about knowing more about the nation's, India's most advanced data and analytics tool, Strike, right now. This is your time where you can register it for free and you can get your hands on it. So log on to web.strike.money, guys. And that's it. We are going to end this video right now. Thank you so much, Jay. Take care of yourself. Yeah.
Thank you.